The four-step method to high-performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high-performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be just reinforcing some simple concepts about why it's so important to have playbook best money-making trading setups, ones with 90-10 edge, and why utilizing a daily process is what helps you identify the instruments that are going to potentially set up into your session for easy money-making trading setups. Not guessing, not hoping, not wishing, but looking for the same repeating setups. Hindsight makes you a lot of money when you master it. Simple repeating setups that are scalable in size, and then when you're targeting the highest potential probability opportunities, or ACB, they ain't coming back. They can be scaled into. Zero stress, zero emotion, zero thinking, and for the most part, zero management. Scalable, repeatable on any market, any instrument, any session. But utilizing the higher time frame to help us identify these instruments, understanding the weekly template, and keeping things simple. Not guessing, not hoping, not wishing, not doing other degenerate gambling types of behaviors in between, but hunting money-making setups and building your muscle memory so that you actually understand what a money-making setup is and not doing anything else in between. Now, we go over this in every video, and I'll repeat this again. Everything starts from the higher time frame, the daily charts. And what happens is that traders are focused on the smaller time frames all the times, and they're missing the bigger picture and the signal days, and then not tracking the instrument for when it sets up for the explosive parabolic move. So we'll walk through that simple process again. Day counts, simple, nothing changes. Monday is always day one. People are changing day counts. They're calling it cycles and everything else. Monday is day one. Why is that? Because Monday is the first trading day in a new week. Every single week. Now, if you want to keep things simple, stick with simple. Monday's the first trading day. It's the opening range. Everything starts from Friday's closing price, because when the market closes on Friday, guess what? On Monday morning, that's the reference point. Regardless if it gaps, if it doesn't gap, it doesn't matter. Everything's based on Friday's closing price. The market's up 1%. It's down 1%. It opened on a gap. It is all based on Friday's closing price. Let's look at a couple of examples of instruments that gave signals on Monday. Now, Monday morning, the pound yen opened on a gap. It opened on a gap from Friday's close. Traders, whether they looked at the Japanese yen, the euro yen, the pound yen, it opened on a gap. Now, we're going to use this pair as a specific example just to demonstrate the process. And what's important about this is I want traders to understand that markets only do three things. And we are hunting opportunities based on how the daily chart closes. Now, this market opened on a gap on Monday. Now, gap being what? Well, we said that everything starts from Friday's closing price. Everything starts from Friday's closing price. That's the reference point when the new week begins. Now, so far, this is a fact, so we don't need to worry about subjective or objective rules or anything else. Everything begins from Friday's closing price. We had a gap. The market fills that gap in the beginning of the new day on Monday. Now, let's just back this chart up. Now, if we go back, we can see that Friday was the high of the week. But we also see that Wednesday, the midpoint range of the week, was a reset and also an outside day. An outside day. Thursday was an inside day. Now, an inside day is a day where the high of the day and the low of the day are inside of the previous day's range, but that's also a signal day from the playbook. Page 69, we can look for false break reversals, we can look for trend trades, depending on where these signal days show up in the weekly template. Now, this outside day forms a box. Friday breaks out but closes back inside of our box. We talk about markets only doing three things. This applies to every single market, whether it's shares, metals, indexes, crypto, energies, or currency pairs. All markets do the same things. They break out, they pull back and continue to trend. They break out, they fail, and they reverse, or they stay in a trading range, trading back and forth between the high and the low. That's it. Now, one of the things we speak about in the playbook is understanding the importance of when markets have false breaks. False breaks, page 25, can be the beginning of large moves, explosive parabolic opportunities. Why? Because they have traders trapped on the wrong side, chasing markets either up high or down low. Now, one of the key things I want traders to understand about this video is it's you, the trader, following the process and understanding what you're hunting. What's happening is traders are going, well, it broke out and I caught the move back inside. You're trading the small time frame and missing the higher time frame signal. So let's get back on track here. We have our inside day. We have a market that broke out and reversed and closed out the week, the closing range of the week. Now let me keep repeating this. This is my process that I have put together to keep it simple for myself. Why? Because Monday opens the week, Friday closes the week. The closing range can tell us a lot heading into the new week if we have signals. Day 1, day 2, day 3, front side. Wednesday resets. It's the midpoint range of the week. Why is that? Because it's the middle of the week. Day counts don't change. Cycles, sweeps, hunts, runs, goops, gaps, soups, all these other things. Day 1, day 2, day 3. Signal days, reset. What setup do I have on the front side? Day 1, day 2, day 3. What setup do I have on the back side? Resetting into the new week. New template. Week 1, week 2, week 3, week 4. New month starts. New timing cycle. Weekly levels, daily levels, monthly levels. Those are the key levels on any instrument. Any instrument. Remember, the smallest time frame I'm targeting is a daily range. We can get range expansions. We can get range reversals. But that's what offers us asymmetrical risk reward. It's a box. It's a large box, whether it's a weekly high-low, a daily high-low, or even a monthly high-low. New month, new timing cycle. If you don't understand that, go back and watch the higher time frame videos. Remember, we're hunting specific repeating opportunities. And in the best cases, the A+++ setups, the ones that are ACB, they ain't coming back. They're scalable in size. We can get range A++ opportunities. They're going to do a full daily range and not come back. Whether we're going in the short direction or the long direction, we're targeting 90-10 opportunities where we almost can't lose. Training yourself to understand what those setups are and not doing anything else in between. Not guessing, not hoping, not trying to catch moves or grab some pips, but focusing on the setups where you almost can't lose that are scalable and they aren't coming back, at least in that session. We started this video off about Friday's closing price and a market that came up on our watch list, opening on a gap on Monday morning. Now, the best part about this is that it closed outside of Friday's closing range. Friday's closing range, which was also the high of the week. Monday's opening range establishes a new high and low in the new week. That's our opening range. It closed outside of Friday's range. It's in breakout now. We have shorts in the market. Friday's low of day level may be a neckline. We had an inside day. When we break Thursday's high of day, this automatically makes the inside day, day 2, and Friday's day 3 on the back side of the week. It closes back inside of the outside day range, which is our larger box. High-low, a high-low box. We want to be selling high in the box or buying low depending on what setup presents. If we have breakout traders trapped now on the break of the inside day, Monday's opening range, we have our gap down and we have a close outside of Friday's range, we now have a potential setup on day 2. Day 2 typically expands the range, right? Monday starts from one opening price, makes a new high and low range. Day 2 typically expands the range. It doesn't matter what your favorite instrument's doing, which one offers the range expansion parabolic opportunity or reversal opportunity. A market can reverse and still expand the range. Understand that. We can have a false break and it can reverse the entire day's range and expand it on the opposite side. But day 2 typically expands the range. Which one offers us the parabolic setup? Now here's where traders get confused. They look at this on day 2 and they say it's inside. Actually, no, it's not inside. We're outside of Friday's range. We have inside bar traders trapped. And traders who understand this now know that they're potentially going to go after the low-hanging fruit where the money is. That's where stop losses are on the higher time frames. Page 29 in the playbook is the basic model for trade entry criteria. And what that does is it's just designed to eliminate analysis paralysis for traders who are struggling to understand how to get in. Once you master the skill of getting in and understanding the setup, as I mentioned over and over again, get in, place your stop loss, and then understand where you're taking profits. Now, as I've mentioned before, recognize that price is in a box. We have a little M pattern, but we have our larger consolidation. We can take a 100% expansion of that range and project it downwards as a take profit level. There is nothing mysterious. There's nothing complicated. Entry, stop loss, and a take profit level. Now let's just go back to the start. We had a market that opened on a gap. We have a market that closed in breakout on Monday, the opening range. Day 2, we're in a box and we have a market that's coiling now. We have inside bar traders trapped up high. We have an outside day where the breakout has failed in a larger box, and we have our pump, coil, and dump opportunity heading into our US session. Now traders are going to say, well, this was out of my timing window and everything else. This is not out of the timing window for Europe London traders. The trade is in process. If traders come to this screen at the New York Open, the market is already broken down. We have a low-hanging fruit continuation. You can still manage your risk. You can still take a position in this market, and we still have a measured move range expansion. If you're taking it as the low-hanging fruit, we now are in an A+ opportunity. Range expansion, take profit level. So this is just an example of traders who are following markets or looking for signals from the higher time frame and then just following the process. This is an easy, scalable 5-star A++ setup for a range expansion opportunity on day 2 on the front side of the new week. Now let's take a look at another opportunity. A key thing for traders to take away is recognizing what looks like a 5-star opportunity versus trying to trade markets just because they're at highs or lows. Now, an excellent question from a trader yesterday: why did you draw your box from these two levels? That's the high of the week and that's the low of the week. Weekly levels, that's the box. The week, when the new week starts, we're inside of a box. Really simple. Remember what I said: daily levels, weekly levels, monthly levels. Therefore, that means the smallest box that I'm looking at is a daily box. But when we start a new week and we're inside, those weekly and monthly levels are our box. I don't understand. That's so confusing. Well, if I want to target asymmetrical risk reward, I want to target a box where I'm going to be risking 1R for either 5, 10, 15, whatever. But that's my box. That means I'm going to risk a certain amount at the top of the box or the bottom of the box, targeting the opposite side of the range. Now, Think in simple terms, if classical chartists trade breakouts based on their best templates, and this is a larger rectangle, and a lot of breakouts can fail. Remember the three things that markets do. Just for example, on a 1 hour chart, we have a market that closed in breakout. Traders may have taken a position on the hourly time frame in the breakout direction, and that breakout eventually reversed and failed if they hadn't locked in profits. Now, the next side of that is that traders are chasing all the candles on the small time frame. Remember, I'm talking about signal days based on the close of the daily chart. Now, I'm looking at a 1 hour chart because I understand that as a daily chart when I'm hunting signals. Now, one of the things that traders need to do is develop the understanding of signal days, but then also what setup presents, what an A++ setup presents. So we follow our new week, day one, our opening range. The same process applies again. Friday's closing price. The market explodes in breakout on Tuesday, day two, expanding the range. And a lot of times traders think, oh, how did I miss that? I missed the move. But all this is now is a market that's broken out. So how does price behave on the day? What opportunities can that avail us to? We talked about this last week. We had day one, day two, day three. Market closing in breakout, breaking out again, going higher and offering traders in the U.S. window the reversal trade, the session reversal trade. Thursday, trades back up to the high of the week. Several traders asked me, well, why wasn't Wednesday a first red day? Well, it's a down closing day and we're still in breakout. We're outside of the range. And it doesn't matter whether it's a down closing day or an up closing day. How does it set up on the day? It pumps back up to the high of week level. It pumps up back to the high of week level, resetting into the backside of the week. So I'm going to keep repeating this simple thing. It doesn't matter what signal you get. Hunt the signals, but then how does it set up on the day? Okay, well, if it's a first red day, does it give me a first red day selling opportunity? Not in my timing window. It breaks down, and Friday breaks down and breaks a low of day level, lower lows heading into our new week, back on top of our buy-low box. How does price set up on our Monday? Friday's closing price is where everything starts from on our new week. Breaking down, traders in our New York session got the low-hanging fruit after our first red day signal. Pump, breaking down, and the low-hanging fruit in our New York session. A first red day signal, and then at the close of our opening range, a market that closed in breakout. We have a higher time frame first red day signal that continued to break down and make lower lows. Now remember, the whole understanding is if a market breaks out and fails, where is the money? The new week, when it broke out, had higher level longs already in the market. See the gap, the space before it broke out? We're on top of the previous Wednesday's range. If this market fails, it potentially could move fast. Why is that? Because it has traders trapped on the wrong side of the market. Let's go back to our signal day, day one, day two, in the front side of our new week. Traders from the masterclass will recognize you can only trade in one direction. And traders who don't like hindsight missed out on a 5-star A++ scalable opportunity for easy, abundant, multiple layers of free cash. An ACB hold till close setup, scaling in and holding. Placing your stop, managing your risk, and as this market continues to break down, even if you took a position, placed your stop, managed your risk, zero stress, zero thinking, zero emotion, zero management. Why? Just from following the process, the higher time frame signals, and understanding that markets only do three things. Now, if you're taking trades and missing out and getting 50-50 results or anything else, why not hunt opportunities where you almost can't lose? Using signals, not chasing little movement on small time frames until you master the understanding the signal from the higher time frame, the daily template, targeting a daily range. A daily range. Why is that? Because I'm risking 1R for 5 or 10R, but they're scalable and they're high probability candidates that aren't coming back. And as I keep saying, instead of trying to catch moves everywhere and grab pips, focus on where you can size into the market and take 2 or 3 of these opportunities a week, and then train yourself to walk away and not do other degenerate gambling 50-50 types of trades just so you can catch moves. Where can you scale in and compound your trading account with zero stress, zero thinking, zero emotion, and for the most part, zero management? That's my thought process. Doesn't matter to me what other people think. Make trading a pursuit of pleasure. How do you do that? You make money on the setups and the days where it's really easy to make money. Now, this is a 15-minute chart. When your skill set dictates, focus on the smaller time frame when you understand the setup is already in place. Now go back to your daily levels. The market closed in breakout. It stayed in breakout. I have traders saying all the time, well, it's still inside. No, it's in breakout. And it stayed in breakout. Higher time frame sellers still driving this move, and it's targeting the other side of the range. Breakout, tried to go higher, eventually failed, pulled back, coiled, broke down, coiled again, and exploded. Day 1, day 2, day 3, blowing off in the direction of the low of week level. Now, there were several opportunities everywhere. And the one thing that I really want to impart to traders is recognizing the easy money setups. The easy money setups. Not worried about catching every little move in a market. There are session scalps, and then there are A++ range trades for 5-star scalable opportunities. We had the inside day and a first red day signal on the Canadian dollar on Friday, the closing range of the week. We had a market on Thursday that broke out of Wednesday's high of week level and closed back inside of the range. And then a signal day on Friday, the closing range. That market broke down on Monday, closing in breakout. Inside bar traders on the higher time frame, the daily charts are in the market. Market closed in breakout. It broke down and made lower lows heading into day 2 right off the bat. Day 2, Tuesday, typically expands the range. Remember, we're in breakout already of the inside day. Our basic model for trade entry criteria on the higher time frame is already in place. And the same simple process applies. If you're scaling in, still managing your risk, preset profit target, either holding to a close or the measured move range expansion. Now, if you don't like hindsight, you should start learning from it, because hindsight pays big time. And when you understand that these are targeting ranges, daily ranges, the daily time frame is the smallest time frame we're working from. And that markets only do 3 things, but traders do all kinds of crazy things. They don't have a plan. They don't stick to a plan. They over leverage. They try to catch moves. They try to get back to the high water mark. They're worried about trying to make money every day instead of targeting easy money, making scalable opportunities. Not every little zigzag on a 1-minute chart. Where's the scalable opportunity? Higher time frame signal days. As I keep saying, day signals. Day 3 longs in the market. First red day, first green day, inside day. The close of the daily time frame alerts us to potential trade setup opportunities, and then tracking those markets, understanding where we're at in the weekly template, and then how does price setup on the day in your timing window. Scalable opportunities require zero thinking, zero emotion, zero stress, and zero management. Doesn't matter what market it is. We can look at the NASDAQ. Everything's got to be simple. If you don't understand what your process is, what your setups look like, you'll just keep going to the screen looking for something moving and try to catch a move. Which instrument offers me a signal and how does it set up on the day? Now you notice on the NASDAQ that it broke out on Friday and pulled back inside and closed right at the high of Tuesday's high of week level. It broke out on Thursday, it closed in breakout. Traded a bit higher on Friday before reversing and closing out the week, the closing range of the week. That forms a box. Friday was the high of the week. It forms a box. Friday's closing price, there's no gap on Monday morning. It opens up, trades higher, dumps down into the breakout level from Tuesday's high of week and explodes through the high, all-time highs, and closes in breakout outside of Friday's high of week level. Close and breakout is a signal, but also understanding that Friday's high low is the box. Why is that? Because we have breakout traders in the market. Remember the three things that markets do. It breaks out, it pulls back, continues to trend. It breaks out, reverses and fails, potentially fails and reverses, a reversal opportunity, or it stays in a trading range. Well, we've broken down prior to our US session. Now, this is where it's important to just let the market set up so traders understand a couple of straightforward things. I keep saying prices in a box. We had a market that broke out. It's broken back inside and made lower lows, giving us information that this breakout may now potentially be failing. But we don't know. We don't know what the market's going to do when it opens. The market opens at 9:30 New York time. Now, I always project these levels across because I want to know, is anybody caught on the wrong side of the move? We have a larger double top pattern heading into our new day. The market has broken down and made lower lows on the inside. Now, if we go back to our 1 hour chart, if we go back and just look at Tuesday, Wednesday, Thursday. Wednesday, remember, is our day one on the back side of the week. We went back through this. Day one, day two formed our box at the beginning of the new week. Day three was inside, but it also formed a first green day. Day two traders on the back side of the week got the range expansion opportunity, but recognizing we have breakout traders in the market on Thursday from the breakout of our first green day trade. And we can project those levels across as a potential area that this market could trade back to if indeed this breakout fails. How does price set up on the day? We have our box. If we're selling, we want to sell at the top of the box. If we're buying, we want to be buying at the bottom of a box. Now we have our 5-minute box and we're pumping back up into our failed breakout level. How does price set up at the open of the New York session? Now, the easiest thing is letting the market open. I had one trader say yesterday they took the S&P, they got in on the first minute, they got stopped out. Now, I'm not trading the first minute. I have no idea what this market's going to do. But after 5 minutes, I have a large death candle. So I'm just sitting there recognizing that what is the market going to do? I don't know what it's going to do, but I have my thesis in place. Let's go back and just understand. We have a box. What happens if this market breaks out and does a range reversal of this box? We have a measured move potential target. Once that death candle's in place, I'm on the smaller time frame. Now, if I can just back this up and show traders, I have a simple process. Once I'm at the screen, I have my 1 hour levels, my 15-minute chart, my 5-minute chart, and my 1-minute chart. So I can see everything that I'm already prepared to hunt. Once I have my thesis in place, it's a simple process. You'll notice that the little pullback heading into our 945 is at the 50% level of our box. Now's the time to be getting into this market because it's not coming back until it goes on a range reversal. Getting in, getting in, getting in, getting in setting a take profit level, going to break even, and letting the trade play out. A day 2 range reversal in a market that closed in breakout, targeting the opposite side of Friday's closing range. We had breakout traders in the market from Thursday and Friday and Monday. Day 1, day 2, day 3 breakouts, 3 days of breakout traders in the markets. Page 51 in the playbook. Simple. Not convoluting it with changing day counts and cycles and sweeps and hunts and inversions and gaps and soups and everything else. Where is the setup? Then executing the trade, placing a stop loss in place, a take profit level, going to break even, and allowing the trade to play out. Locking in the money and walking away. That's it. Everything else is mental diarrhea, jibber jabber, and cluster in your brain. Analysis paralysis. Do I have a setup? Is it a buy setup, a sell setup, or nothing at all? What was the signal day from the higher time frame? What is the overall template telling me? Execute the trade, lock in the money, and walk away. Setup, yes or no? Which setups make me the most money? Find those setups. Don't worry about trying to trade markets and catch moves. Winning trade setups, daily signals, daily ranges, simplicity, 2 to 3 of those a week can significantly scale your trading account up in size. And in between, sitting on my hands and doing nothing else. Who can stop you if you're sticking to 90-10 easy money-making trading setups and not taking 50-50 trades? Show me the signal. Play to win. Hunting money-making setups, not chasing movement and calling it a setup. Stay away from gobbledygook. Stop gambling and start hunting setups where you can't lose and significantly grow your trading business. Have a great day, traders. Start hunting. The backside is coming. Have a great day, and may the markets go with you.